Hey guys, Taylor GammaEdge here coming at you with a post-market recap for May 6, 2025. Today's price action was fairly choppy, really bound between a couple key levels we identified in the options market structure in the pre-market. And this was confirmed with our intraday volume analysis, understanding how call and put speculators were transacting in SPX 0DT. So with that, first let's review the pre-market structures, and then we'll get into the intraday price action analysis. So first things first, starting with our market trend model, which again is just our way of gauging trend and momentum in the market built off the tick index. We could see today that this is the pre-market view. We have been very strong for a couple weeks now. Keep in mind that the momentum bursts are generally 1 to 3 days in length, so this one is a bit long in the tooth. So what that means is, if you're looking to get long the market now, that opportunity was a lot better when we started to get the reversal signals a couple weeks ago that we were talking about, not today. Having said that, the market is still strong. We just want to see some form of consolidation here before we start moving higher again. Next, quickly going to SPX full complex, starting with SPXA. Again, this is your monthly, quarterly expiration, kind of your larger, slower moving capitals in here. Call dominated below spot price, above spot price, and make sure call and put dominated strikes. So we need to see this continue to improve. If you went and looked at this time last month, this was all put dominated. So structure certainly has improved. And then, just net GEX really is near zero. So the structure is well balanced right now. Then going to SPXP, again, fairly call dominated structure above and below spot price. That is constructive to see. Next, moving to SPX 0DT structure, a couple of key highlights to note. The pink box, this is simply just the expected move from the options market. The blue box, this is our DEX and our GEX transition zone, so delta and gamma transition zones. Simply put, in between the transition zones, we expect to see choppy price action because there's indecision between call and put speculators. Above the transition zone, we enter a call dominated regime, so we expect to see higher prices, and below transition zone is more of a put dominated regime, so expect to see lower prices. And then within that too, you'll notice this orange box. This is what we call the drunken sailor range. Reason this is important because when understanding the distribution of call and put speculation in the complex, understanding we may break through the top of the DEX transition zone, but that distribution is still weak overall, meaning that call domination is not that big. So it kind of creates a void or an air pocket in the structure where intraday volume analysis can be very important. Additionally, the top and the bottom of the drunken sailor range represents really good goalpost of the area and the structure that is generally harder to break through. It really takes an impulse of buying to propel us over that zone and then further up into the structure. And so this is why, we focus on these zones. So again, the DEX transition zone today was 56.55, 56.60, and the drunken sailor range was 56.35 to 56.85. So how that is useful, how that it's actionable, above 56.60, we are generally more favorable to the long side. Up to 56.85, we want to see that, break out there and then, feel much more conviction higher. And then to the downside, right, same thought process below 56.55, then it's 56.35, below 56.35, then we want to see, material speculation lower. But those are the key levels, right? We also need to see the market trend model. If we're moving higher, we want to see this, moving higher, large filter tick buying, or if we're moving lower, then want to see this move lower, filter tick selling. But I now realize I am showing you the market trend model from today now, so we can see that it's fairly choppy price action all of today. The filter tick selling that did take place, again, this is large. Our measure of large significant transactions in the market. So those were net selling on the session as well. But really, you can just see how there was just kind of a lack of direction all day. And then again, looking at price action today, so I have 5,600 mark. This is a key psychological level, was also a key level in the structure. I didn't explicitly hit on it from the video just a second ago, but this was hit on early morning. We then have 56.35 up here. You can see how we did get some pretty significant price interaction with that level today. It was kind of a good cap on the market, so to speak. And then we have 56.50, which again is a whole psychological level, or really a half level, but nonetheless was pretty significant level in the option structure as well today. If you just look at the positioning, call and put speculation in the 0DT, we saw a meaningful amount of concentration there. So again, right, honestly, you can just see how price bounced around between our levels all session. This was certainly an easy day to get chopped up. That's really no better display than our intraday volume analysis chart. So this is called our volume momentum chart. What we do is on a 5-minute basis, call and put volume. We aggregate that again on a 5-minute basis. We understand the distribution. We find the middle point, and that is called a centroid. So what we do is we plot those centroids on a 5-minute basis throughout the session. We connect the dots on the call side and the put side, and we form these solid green and red lines. And so the whole point of this is those centroids serve two purposes. So let's pretend from market open to noon, we have this call centroid here. We can understand A, what is the character of price action up until that point? So price action is either trending or choppy. This, today was just a classic signature of choppy price action, meaning that speculation of calls was trending sideways to lower throughout the session, and puts was sideways to higher on the session. So, right, those are kind of two converging different sides of the market, hence the choppy price action. Right, so these can understand the character price action. Secondly is, again, from 9:30 to noon is our example. If we understand this is the behavior of call centroids, because that represents, the transactions taking place in the market and really sentiment of the calls to speculators, then we can project out what that likely path of the centroid is going to be through the close. And we can do that for the call and the put side. And, price goes where transactions occur. So if we can understand where the centroids are likely to go, we can understand where price is likely to go throughout the remainder of the session, and also where price is not likely to go. Again, understanding what the trend of actual sentiment and transactions happening in the market along with our key levels is a powerful kind of 1-2 punch in our opinion. So right, just looking at the volume again, very choppy. Going back to the market trend model, very choppy as well. So we got nice confluence there. And then you can imagine, if you're an options credit seller, understanding kind of, the market is choppy, understanding where those centroids are, selling above and below those centroids, above and below those key levels we identified early in the market, or, if you're an intraday scalper, understanding that the market is choppy today. So kind of limiting those expectations of what you should be expecting for kind of an upside move and a downside move. And so here is kind of the utility of this tool. I just wanted to show you this quick example. So this is what the chart looks like at 11:45 Eastern Standard Time. Remember, we produce this chart every 5 minutes. And so that we can see from the open to 11:45, the call centroid was fairly flat. So, again, understanding the price action and what the projected move could be of those centroids, we can project that out, and it is expected to continue to be flat. So what that means is that kind of puts a lid on the upside move. We were seeing speculation really not above 56.50. So again, right, all else equal, we're not expected to see a huge kind of expansion move higher because we're just not seeing the speculation start to trend higher. And then looking at the put side, we see this kind of trending move higher, sideways to higher, right? This is just a classic pattern that we've been seeing lately. And really what this does is, this kind of tells us, okay, there's not a material risk of like a large downside move right now because we're just not seeing that large, material speculation by the put sides lower. And what happens and what you'll see in a little bit is like these centroids, the centroids don't actually cross, like that's just projecting it out. But what's going to happen throughout the session is as this call side continues to take this path, this put side is going to become lower and lower and lower and lower, and it's going to flatten out, and you're going to see how we get that choppy price action. And then again, you can kind of see it right here. We fast forward 2 hours, you can see this put centroid is now, the line of best fit is now below the call line of best fit, and we can still see the behavior of the call side is, flat to higher, and that puts, and the call centroid side is still very flat, right? Again, lid on the market, really not seeing anything that would warrant, material risk to the downside. So again, just a choppy day. And then here, just bringing it home, we take those 5-minute automatic outputs, we create a GIF of it at the end of the day where we just stitch them all together, and we can just see here, just looking at the GIF, how this call side really flattens out. Again, the put side really comes down. We get that choppy signature. And yeah, that's kind of what the market did today. And so with that, hopefully you guys understand kind of how we develop our key levels from the options market, how we understand kind of trend and momentum through our market trend model analysis, and then we understand intraday kind of volume dynamics that help us inform not only character price action, but then also kind of what our expectations of where price could be headed throughout the session. Right, we keep it simple with those three simple tools, right? We have a couple other tools we like to use intraday, but don't want to bog you guys down with those here. But right, it should be pretty clear, kind of understanding from a intraday perspective how to use those. So if it's not, let me know in the comments, or if it is clear, let me know in the comments too. I'd appreciate that. And with that, y'all have a good night. We'll talk to you tomorrow. Thanks, bye.